Welcome to MacroHive Conversations with Bilal Hafiz. MacroHive helps educate investors and provide investment insights for all markets from crypto to equities to bonds. For our latest views, visit macrohive.com. So welcome, David Rubenstein. It's great to have you on the podcast show, and I've been looking forward to this conversation for a while now.
Thank you very much. My pleasure in being here.
Great. Now, before we go into the meat of our conversation, which is about your interviews of some of the top investors in the world and your book, How to Invest, I do like to get a sense of all of our guests' origin stories. So it would be good to kind of get a sense from your side what your origin story is. Was it inevitable you'd end up in the financial industry and becoming a titan that you are now?
Well, my background, is that what you're asking?
Yes.
I come from Baltimore, Maryland. And I am the product of two people that did not graduate from college or high school. My father dropped out of high school to go into World War II. He came back. He met my mother. He was 20. She was 17 when they got married. I was their only child. He worked as a blue-collar worker in the Postal Service in the United States for his entire career. I got scholarships to go to Duke University and then University of Chicago Law School. I was interested in going to government and politics. I didn't have any money. I didn't really care about money. And I was really interested in politics. I went to work for Ted Sorensen, who had been the top advisor to John Kennedy. He helped me get some introductions to people that helped me get a job in the Carter campaign. I worked for Jimmy Carter in his campaign. He won in 1976. I worked in the White House for 4 years as a deputy domestic policy advisor to President Carter. Unfortunately, we got inflation to 18%. We didn't get reelected. I went back to practice law. I wasn't very good at it. And so I decided in 1987 to start Carlyle, which grew to be a large private equity firm.
And just out of interest, why didn't you stay in politics? Because it sounds like you were very much interested in policy and politics.
I was, but what happened was when Carter lost in 1980, it was a humiliating loss. He lost dramatically. I mean, it wasn't a narrow kind of loss. And anybody associated with the Carter administration was seen as incompetent, a failure, not somebody that anybody wanted to touch. In fact, when Bill Clinton was elected president of the United States, I guess it was 8 years later or so, or no, 12 years later, he didn't want anybody that had been associated with Jimmy Carter to be in his administration because Carter people were not thought to be that competent. And so hanging around politics, people would have said, oh, you're part of the Carter administration. We don't really want anybody part of the Carter administration. So I decided I would just get out of that, and I would have practiced law, but I wasn't that good at it. I really didn't enjoy it. So I still enjoy politics and government, though I don't give any money to any campaign anymore. I stay out of it, but I do meet with political figures from time to time, and I know them reasonably well, but I've decided to stay out of elective politics kind of things.
Yeah, that's probably a wise move. And now you co-founded Carlyle. Carlyle is one of the largest private equity funds in the world. Private equity has changed a lot from the 80s, where it was just a nascent industry to today. I mean, how would you describe the evolution of private equity over your lifetime?
Well, when I started Carlyle in 1987, there were roughly 200, let's say, alternative managers in the world. Now there may be 10,000. The phrase private equity means different things in the United States and out of the United States. Out of the United States, it means more or less buyouts. In the United States, it generally means all alternative investments. So it could be buyouts, venture capital, growth capital, distressed debt, whatever it might get you at a higher rate of return than a public market might. The industry today is not alternative so much, it's mainstream. And in my book, I have mainstream and alternative investments, and I put private equity in the alternative category. But the truth is, almost anybody that has a fair amount of money is now allocating at least 10 or 15 or 20%, if not 25 or 30%, to the so-called alternative investments of venture capital, growth capital, buyouts, and so forth. So it's become a part of the infrastructure of the investment world. When it wasn't in 1987, it was seen as an odd little small part of the venture world or of the investment world then. Also, I would say the people don't rush up and kiss the feet of private equity people in Washington, D.C. They're not beating us over the head as much as they used to. It used to be the case that, if the weather was bad outside, they'd say, well, private equity is responsible for that. If somebody, lost some money somewhere, private equity must be at the root of it. So now we aren't blamed for every sin of society. And that's because I think people recognize that the industry is very big and does some good things. So the industry's changed its image a bit, not perfectly so, When I say private equity is the highest calling of mankind, everybody still laughs because nobody really believes that it's really the highest calling of mankind. But it's not something that you're embarrassed to say you're in the private equity industry anymore. So I think it's changed in that sense. And also, I would say generally people are more sophisticated about investing than they were 20 or 30 years ago. More people have more money, more people are paying attention to the markets, and therefore somebody that's in the investment markets, as private equity is not considered such an unusual kind of thing anymore.
Yeah, that's great. And now you published this book, How to Invest, recently. And what motivated you to write the book? Or actually, one step further, what motivated you to interview all of these great investors?
Well, a number of years ago, I was became the president of the Economic Club of Washington. I was supposed to bring business people in to speak, and I did, but they tended to be boring speakers. People were falling asleep. So I said, maybe I could liven it up by interviewing them. And I did, and people liked it, and they put it on Bloomberg, and now people regard me as an interviewer a bit. And so I've gotten in the habit of interviewing lots of different people, and because I'm an investor, and I do appreciate the value of investing, I thought, since I probably have access to the best investors in the world, why not interview them, use my technique in interviewing them, and then put it in a book for the purpose of trying to educate younger people to say, look, this is not a bad profession. You should consider it. Trying to educate retail and average investors about the way they should maybe consider investing their money. And then also to try to say why investing is not a bad social thing, actually produces jobs. It can do great things like the venture investors did who gave money to Moderna, and that they produced a great vaccine. So I'm trying to say that investing is a good and noble thing. It's a good profession. Younger people should consider it. That's why I did it.
Great. And the book, I have to say, is very good. And it covers so many different types of investors in terms of their personal style, but also asset classes as well. Just in terms of the asset classes, you did break it down into three sections from what I recall: mainstream investors, alternatives, and cutting edge. Why break it down in that way?
Well, if you've ever written a book, the publisher always says we have to have things that, we have chapters, we have to have sections. It makes it easier for people. So that's why I did it. And then I kind of thought, okay, these are three categories that sort of make sense. I could have divided it into 5 different categories or something, but you learn generally people can get their heads around 3 categories. If I say there are 8 categories, then it gets too confusing. So 3 categories is the number that people generally get their head around. You can have 4 too, but generally you have too many categories, people get confused. So I came up with 3 categories.
And in terms of, I have to ask you this question. Were there any common patterns you saw across all of the investors? What's the secret of being a good investor?
Generally, the common patterns are these. One, they tend to come from blue collar and middle class families, not upper income families. They tend to be pretty well educated. They tend to be pretty good with numbers. They tend to be willing to share blame and willing to, accept blame and share success. They tend to be people that have incredible intellectual curiosity, want to read as much as possible. They tend to be able to make a mistake and get over it quickly and go on to the next thing. They tend to be people that are willing to defy conventional wisdom, which is to say they go against the grain. They tend to enjoy this more than they do anything else. So for them, investing is not work, it's pleasure. And that's why they work long hours. In the end, they're not doing it to make money. They've made money. What they're really trying to do is show their intellectual forte and investing well, and then ultimately give away the money, which is what most of the great investors are really doing.
And you, as I said, you interviewed a number of investors from Larry Fink to Seth Klarman to Druckenmiller, Dalio, and so on. Were there some investors that you interviewed that really surprised you in the way they do things?
Well, Stan Druckenmiller is a really talented investor, and he says in the interview, I don't like to give people advice because I change my mind all the time. I like the subject. I like to, be free to change my mind. If I give somebody some advice at a cocktail party, I change my mind the next day. I don't want to call them up. So he's frequently admitting that he has lots of different things that change his mind, and he's willing to admit that he changes his mind frequently. I think many of them are people who I would say they're very smart, and they tend to want to make the final decision as well. They don't really like to say, I'm going to delegate this to a whole bunch of other people and let me get the credit if something works out. They really want to make the final decision themselves, and they're willing to take the responsibility for the final decision.
And then I did want to ask you about culture and how to build an organization. Obviously, you interviewed someone like Larry Fink, and you yourself have created a great company. How do you go about doing that?
Well, in our case, at Carlyle, it's what I call a collaborative culture. We call it one Carlyle. Everybody's pulling together. Obviously, you have a global organization. It's harder to do that increasingly, but that's what we try to do. Larry Fink is very big in building a culture. He built the biggest investment firm of them all. I think culture is very important. And I think you have to, there are three ways you can influence people. In fact, life is all about influencing people. Nobody can do anything by themselves. Even if you come up with E equals MC squared, you have to convince somebody that actually means something. So how do you convince people? We have three ways of doing it, basically. One, you can write extremely well. You can write the Declaration of Independence and convince people that's a great idea. Though I suspect King George wasn't convinced by the Declaration of Independence, but you can write well. Secondly, you can talk well. You can be Martin Luther King giving his great speech, I Have a Dream, and you can convince people. But the most common way to convince people, certainly in a big organization, is not by writing memos or giving speeches at town hall meetings. It's by leading by example. So you do what you want others to do. And the great leaders have certain traits and other people observe them and they follow them. So the best way to build an organization, a culture, is to do what you tell other people to do. If you tell other people to cut costs, don't be, extravagantly spending money. If you tell other people to work hard, don't be seen as not working hard. Do what you want other people to do in your organization. That's the best way to persuade people and build a culture.
Yeah, that's great advice there. And I did notice you did interview some investors who are a bit more reclusive or aren't who don't often give interviews. Seth Klarman is one. Many people have read his book. They've somehow got hold of his book and hang on every single word.
Yes.
But what did you make of Seth?
Well, Seth is a very smart person. He's from the same town I am, Baltimore. And I didn't really know him that well, but he asked to interview me for a children's hospital in Boston. And I told him that was a role reversal. I should interview him. So ultimately, we had a kind of joint interview. He interviewed me, I interviewed him. And then afterwards, I came back and said, let me interview you for a book I'm doing. And he was willing to do it. So he is he's not a publicity seeker. He's pretty shy about, seeking publicity, but obviously very, very, very smart.
Yeah. And there were other investors who I wasn't as familiar with. So Ron Barron was one. And it was interesting. You highlighted him, and he obviously runs a very successful mutual fund, not as glamorous mutual funds as some of the other, asset classes. Why did you pick him, and what did you find interesting about his way of investing?
Well, he's not known to people like you because he basically deals with retail investors, and he's dealing with investors, and that's who really buy his shares in his mutual funds. But I got to know him when Carlyle was going public. He was one of the people I went to see about buying our stock, and it turns out that he does interview a lot of managers directly who are taking their companies public, or CEOs taking their companies public. He does enormous amount of research, but he also, when he finds somebody he likes, he sticks with them. He's been one of the biggest backers of Elon Musk. He bought his stock in Tesla early on, and he made a fortune with that. And he's also bought a lot of stock in SpaceX. He's also now an investor in Twitter, which may not be quite as successful. But so I thought he would be good to show what a mutual fund manager does and why he is successful at what he does. And his secret, among other things, is doing a lot of due diligence, but also not selling very much. He doesn't want to pay taxes on the profits, and he also likes to compound a larger amount of money. If you don't sell, you have more money to compound. So that's one of his secrets.
And I noticed also he had a comment about how to interpret financial statements, and he puts a larger weight on the revenue sales numbers, which he feels are less easy to manipulate than the earnings or net income numbers.
Yes, he thinks that revenue is the best indicator of how a company's really doing. You can agree with that or not, but take Amazon, for example. When Amazon was being built up, the analysts on Wall Street said, there's no earnings, Jeff, there's no earnings. And he said, well, I'm building the company. He said, but there's no earnings. And in the end, he had the last laugh. He built, one of the most successful companies in the world because he focused on customers. He focused on building his revenue base, and the profits eventually came.
And then you have someone like Sam Zell, real estate, mogul, so to speak, entrepreneurial. And his style is quite different from some of the other investors. He seems much more instinctive, much more entrepreneurial. At least that's the take I got reading that chapter.
He is not a guy that's going to sit down and read a 100-page memo on an investment. He basically has a very good seat of the pants mindset. He's very instinctive. He's got great judgment and great confidence in his abilities. And he's not insecure about his abilities to analyze a deal. So he's one of the old school, like Warren Buffett. He's not reading large investment committee memos to decide whether he should do a deal or not. He does his own basic due diligence, and makes his judgment pretty quickly.
Yeah. And then at the other end of the spectrum, you have someone like Jim Simons, quant extraordinaire, incredibly successful performance, very systematic, doesn't hire finance people, mathematicians. Instead, he hires mathematicians and so on. What was it like meeting him and understanding him?
Well, I knew him because we serve on the board of the Institute for Advanced Study, which is the place that Albert Einstein went to when he came to the United States. Jim is a unusual person. He smokes 2 packs a day. His whole life, he smoked 2 packs a day. So he's not got lung cancer. He doesn't believe in socks like Albert Einstein. He never wears socks. And even on a black tie event where I interviewed him in a black tie event years ago, so he's iconoclastic in some respects, but he's obviously a world-class mathematician. He's a very famous mathematician who got out of that business and got into the investment business. And he kind of invented quantitative investing, which is to say, using math formulas to develop algorithms that will find inefficiencies in the market and take advantage of those inefficiencies before anybody else spots them. So a brilliant way of making money. I think when I was writing the book, I think I wrote out that he'd averaged, I think for his 30 years or so of investing, 30% a year. And he scratched it out when he was editing it and looking at what I'd written, and he said 40%. So he's actually averaged about a 40% rate of return for something like 30 years. That's in his internal Renaissance Medallion Fund. So if you can average 40% a year for 30 years in a row, that's pretty good.
It's not just pretty good; it's remarkable how he's done that. And then of course you have John Paulson as well, who's famous around subprime. Obviously he made a big bet around subprime. Is that his style, kind of picking out one topic, one theme, and just going for it?
Well, I wouldn't say it was. He's basically a risk arbitrage person, basically betting on announced mergers and acquisitions. That's what he was trained at. And he had a modest hedge fund. I think he had maybe $2.5 billion of assets under management, which is modest in the hedge fund world. And he was not that well known. Very smart, first in his class at NYU, Harvard Business School Baker Scholar. So he's a smart guy, but he wasn't a big figure on Wall Street. But he came up with the idea that he could make 100 times his money, more or less, on an inefficiency he saw in the subprime market, the ability to short it without having any real downside of consequence, but the upside would be dramatic. So he did it, took a big bet. His investors agreed to it, and then he made $20 billion, which is, I say in the book, about the most successful trade ever done. And so he became, world famous because of that. And so it was one big bet. He hasn't found anything like that since then, though I'm not sure anybody can ever duplicate something like that.
And then you have other characters like Orlando Bravo. I mean, I'm not so familiar with the leveraged buyout space. I deal personally with more public markets, but someone like that, could you tell me a bit more about him as an investor?
Well, Orlando Bravo is not that well known in the buyout world, in the general public. In other words, Steve Schwartzman, Henry Kravis, you would know those people. They've been around the buyout world for a long time. Orlando is much younger than them. He was a person who was a tennis player. When he was young, he played with Andre Agassi, and he was at the same tennis camp with them. Ultimately, he concluded he wasn't going to be a real pro, and he went to Brown, Stanford Law School, Stanford Business School, and he got into the buyout business, but he specialized in what's called enterprise software, which is to say software that when you build it, you can then sell it, and the margins are very high because you just can replicate over and over and over again. And so he built a firm with the help of some others, Thoma Bravo, where he's averaged, I guess, some net internal rates of return of 30% or so. And as a result of that, he's built one of the biggest organizations in the world, just focusing on one type of area, which is enterprise software. And he's now become very involved in philanthropy. So not that well known, but he's also designed to show you don't have to be a white male to do this. He's Hispanic by background from Puerto Rico. And I wanted to illustrate in the book that you can be African-American, you can be a woman, you can be Latino, and still be very good investing. And it's not just a white male preserve as it once was.
Yeah. And then I also enjoyed your interviews with Mark Andreessen, some of the VC, characters. Mark Andreessen, he is quite high profile. In person, is he the same as his public profile?
I've known Mark for a long time. When he was trying to raise money for what became Netscape, he came to my office. We rejected it. We thought he said, this will enable you to navigate the internet. And I said, well, what is the internet and why would I want to navigate it? We didn't know what he was talking about. But he's obviously very smart. He's built from scratch one of the best venture firms in America or in the world. And he's been a leader in that industry for quite some time. He writes a lot. He talks a lot. And so he's very, very visible. And I would say one of the more impressive people I've met in the venture world. I offered to buy a piece of his company when he was starting it, and he didn't need any capital. So unfortunately, I wasn't able to do that.
And with something like venture, I mean, to me as an outsider, it seems like almost like a lottery ticket. You invest in a whole load of companies and you hope one will win big. I mean, how is someone like Andreessen able to do that, like regularly?
It might seem like a lottery ticket, but when so many of the firms consistently do well, like Sequoia, Andreessen Horowitz, or others, it's obviously more than a lottery ticket.
Yeah.
What they tend to do is they do see, they have a reputation for knowing what they're doing. So the best entrepreneurs will want to show up on their doorsteps. They tend to be able to add a lot of value to the entrepreneur because they have a network. They can tell these people what the mistakes are that people typically make when they're building companies, and they really help them recruit CEOs and executive talent. So I think it's not so much luck, though. On the other hand, nobody really knows when these companies are starting, whether they're going to make it or not. In hindsight, it's always 2020. So, for example, a small company started by two guys from Ireland called Stripe was backed by Sequoia and a number of other people, and it's probably the most valuable unicorn today. It may have a net worth of maybe $200 billion when it goes public, and it just all started with a couple $1 million given from Sequoia and a few other firms. But nobody really knew how great it would be. Nobody really knows. In hindsight, it looks great, but at the time, it was a bit of a crapshoot.
Yeah. And, you also did interview Michael Moritz of Sequoia.
Right.
Yes. How does he differ from Andreessen, would you say?
Michael Moritz doesn't seek a lot of publicity. He's very low key. He's not, I think, on the talking circuit that much. Mark is more visible and is promoting the firm a bit more. Michael is more, I would say, low key. He's not running the firm anymore for health reasons. He stepped back for that a couple of years ago. But he's a spectacular investor. And interestingly, he came from a background nobody would have predicted. His parents are Jewish immigrants from Germany. They settled in Wales. So Michael grew up in Wales, which is not famous for producing a lot of venture capitalists, I suspect. He ultimately became a journalist, and he jumped from being a journalist to being a venture capitalist, which doesn't often happen. And he turned out to be among the best in the world. He ran Sequoia for many, many years.
And you also interviewed Betsy Cohen, who I'm not that familiar with. And it's great that you're showcasing, a range of different types of people. And she's, a very accomplished investor on the SPAC side. So could you talk a bit more about her?
Yes. That might be, in hindsight, an oxymoron, an accomplished investor in the SPAC space, because SPACs have gone down a lot since I did the interview. SPACs were devices to enable people to kind of short circuit the IPO process. She specialized in financial service industry companies, and she did quite well. And I would say 95% of the SPACs today are probably underwater. Hers are probably still doing quite well. She's a lawyer by training, a law professor, and an entrepreneur. And she got into this business a number of years ago and built some of the really best SPACs in the financial service world. So it's an industry that I think is probably not going to come back anytime soon. SPACs are probably dormant for a while. I suspect we're a couple of years away from seeing them come back, if at all.
And I did notice in all of your interviews, you kept coming back to philanthropy as a topic and asking people about their philanthropic endeavors and what they thought about it. First of all, why did you raise that as a topic?
Well, most of these people are very, very wealthy. Unless you're working for an endowment or something like that, you've made a lot of money. And I try to probe, what do you do with this money? I mean, you're just kind of piling it up, or just so you can say you're the richest person in the cemetery, or are you doing something useful? And in my own case, as I got more money than I really needed day to day, I began to get involved in philanthropy and saw the pluses of trying to do that. And I tried to figure out how these other people dealt with this kind of challenge of having a fair amount of money, and what do they do with that money? And a lot of them are very involved in philanthropy and take it quite seriously.
Yeah. And I noticed that, at the top, you did mention that people's backgrounds, they were often working class, middle class backgrounds rather than, upper class, so to speak. Why do you think that type of background lends itself, has created so many more, star investors?
Well, there's no doubt that if you're going to be a good investor, you got to work very hard, and you have to put a lot of time into it. And it's a grueling business. Certainly in the early years, and every day you're challenged. If you're from a very, very wealthy family, you might not say, I want to put myself through this. One, I could fail. Two, I'll embarrass the family if I don't do well. It's a famous family. And you just don't have the drive. There's no doubt that I have more drive because my parents had no money than my own children. My children are all in private equity. They're all doing pretty well, but I can't imagine how my children can be as driven as I was. because they don't have to prove themselves in maybe the way that I did. So I think generally, people come from upper class families probably are not going to be the most driven investors. I don't know of anybody whose parents were in the Forbes 400 who are now driven investors and have built their own great investment company. There may be some, but it's generally an exception.
Yeah. And then also in terms of the profile, whether it's minority groups or women, in the profile, do you think the landscape has changed so that it's not just white men who are these great investors?
Well, historically, it was a white male preserve for sure. There's no doubt about it. I'd say I try to illustrate that it's not now as much as it was because I had a number of women, minorities, and so forth in the book. Maybe I should have had more. And I think 10 years from today, you'll see many, many more women leading firms. But today, you have to recognize there are very few women running big private equity firms, hedge funds, or organizations like that, venture firms. Very few women, very few minorities. There's some, but very few. And so I think it's changing, but it's been a white male preserve. There's no doubt about it.
And then if we kind of step back, if you were a policymaker, I mean, what types of policies would you put in place to encourage, the right type of investors or the investment climate? What types of things do you think need to be addressed or done?
Well, I think the less policy would be the best. Having too many regulations and constraints probably are not going to incent people to want to be in the business. But generally, the U.S. is a place that encourages entrepreneurs, encourages investment capital to be formed. I'd say in other parts of the world, it hasn't been quite as robust. You live in Europe, right?
Yes. Yeah, in the UK, London. Yeah.
Think about this. In the venture capital world, these companies were created a number of years ago. Google, Microsoft, Facebook, Apple, and these companies, Netflix, these companies, can you get through the day without using Facebook, Google, Apple, Amazon? I don't know. Maybe you can.
No.
How many of those companies were started in Europe?
None.
Zero. Why has Europe, which has an economy that's actually frankly bigger than the United States, why has Europe not produced those kind of entrepreneurs and those kind of companies? I don't have a good answer for it, but clearly there's something in the United States that incents people to want to go ahead and build these kind of companies. Maybe it's because the government doesn't unduly restrict people or something. Maybe we value these kind of people more, but it is a strange phenomenon that, countries that have so many talented people like England or France or Germany haven't produced technology companies that have technologies that we are now dependent on.
It's absolutely correct. Yeah. Interestingly, within Europe, Sweden seems to be the only country that seems to do very well on the tech side. Spotify came from Sweden. So
that's right.
It's that's the only place that seems to have this entrepreneurial sort of side to it.
Well, in the United States, Johnny, I want you to grow up to be a millionaire. Okay. In England, do people say, Johnny, I want you to grow up to be a millionaire or a billionaire?
No, not really. No.
Johnny, I want to make sure you know how to hunt on the weekends.
Yeah, that's fair. As a European looking at the US, the US does seem quite polarized these days. You've been around for a long, long time. You've seen, the cartoons, you've seen different political administrations. Do you think that the US is more polarized than it has been before, or is that just more the media is such that it amplifies that?
Well, during the Civil War, we were more polarized.
Okay.
So we're not quite as polarized as we were in the Civil War, but we're more polarized than any time since I've been in Washington. I've been here now 40 plus years. That's because the reason for it, I believe, is that to raise money in politics in our country, and money is so important in politics, you have to appeal to the far left and the far right. And when you appeal to the far left and the far right, because that's where you get your money from, you tend to produce a lot of polarization. Very few people give money to people that say, I want to be right down the middle. I can't tell you what I'm going to do, but it's going to be down the middle. I'm going to be a centrist. That doesn't raise a lot of money. And therefore, politicians don't tend to make that kind of pitch. They say, I'm going to support Donald Trump or I'm going to oppose Donald Trump. And those are the kind of things that get money to be given to these politicians. So that's one of the problems. The country is pretty much split down the middle, in part because politicians have appealed to the far left and far right parts of our country.
Yeah. And within the US, especially since COVID, I suppose there's been this move from California to Texas, New York to Florida.
Right.
Do you think that's a structural shift that's occurring, or was that just a temporary thing?
No, because people are moving out of California for a lot of reasons, but one of them is there's no income taxes in Texas or Florida. People are moving from New York or Massachusetts. There's no income taxes in Florida. So when you're basically recognize that you don't have to be living in California or Boston to do your business, you can do a lot of it remotely. We recognize that during COVID, you don't have to physically be where you thought you had to be. You can now take the advantage of going in a no tax state and then save money. And so that's what's happening. And it's not going to change.
And Carlyle is interesting because if I remember correctly, Carlyle started in DC rather than
We're
New
still in
York or
DC.
Boston, which is
That's
strange.
Well, I happened to be in Washington and I'd worked in the White House and I happened to be here. And I took advantage of it by saying, look, I understand companies more heavily affected by the federal government than those guys in New York. Maybe I did, maybe I didn't, but it sounded reasonably true. And maybe we did understand companies more heavily affected by the federal government. So yes, it was an unusual place to build a company like this.
And when you look across the world, obviously China's become this big, powerhouse. There's more tensions between the US and China. How do you see that unfolding? Or
that isn't going to change anytime soon. Graham Allison did a book. He's a professor at Harvard called The Thucydides Trap, and basically talks about if you go back through history, when a rising power is rising, it often comes into a military clash of some type with the dominant power. And so the United States have been the dominant power in the world for 100 years. Now China is rising up. And while I'm not saying it's going to be a military clash, clearly there's competition for who's going to be the technology leader, the economic leader, the military leader, the political leader of the world. And so that clash is going to continue for some time. Hopefully it won't lead to a war, but there's no doubt there's a clash of civilizations going on.
And when you look around the world, are there certain countries that you think are very interesting from an investment perspective, or certain economies that you think that they're managing things really well?
Well, sure. I mean, Singapore is a wonderfully managed country, small, but there are good investment opportunities there. In the emerging markets, I do think eventually Africa will emerge. It's obviously a country that's had some challenges for private investments, but I do think it's a place that will grow. I think the Middle East is booming now. A lot of money is in the Middle East. While it was difficult to find investments there when we had a fund, I do think that the Middle East is going to be a place where you're going to be able to invest more money in reasonable ways in the future.
And in terms of sectors, one sector that's been in the news a lot of late is the crypto sector. There's been lots of companies in the news and so on. When there's like a new technology that comes out, new sector, how do you view that?
Well, the normal human response, maybe because of evolution or other things, is people like the word new. When advertisers are getting ready to market a new product, what do? They say new and free. We'll give you a free sample. It's new. People like the new. People don't like the old. So I would say crypto is new. And people like to do something new. They can get on the ground floor. It's a thing that appeals to younger people. I interviewed on my TV show Sam Bankman-Fried a month or two before his problems, and people found him fascinating because of all the unusual ways he made his money so quickly. But I do think that crypto is not likely to disappear from the face of the earth. There's still an interest by young people in doing those kind of investments, whether they're good investments or not. I don't know, but I do think that it's not going to disappear.
And when you look back at your own life, if you were to give advice to your younger self, like let's say when you were 20 something, what advice would you give to yourself?
Don't practice law. If you're going to go to law school, do what my son did, get an MBA as well as a JD, which is to say have a business degree, and maybe, go into government later in life, not so young. I spent a lot of my early years in either practicing law or going into government. Maybe if I'd gone into business earlier, I could have built a better company. Who knows? And
with Carlyle, obviously there's other private equity companies as well. I mean, why do you think Carlyle has done so well? What was it about Carlyle that made it so successful?
I think it's the good looks of the founder.
Of course.
I think that the good looks is the most important factor. No, I think it was, we did two things that changed the face of private equity and that others followed, did a better job than we did in some of it. One is this. Private equity was a very small mom and pop business. When KKR did the RJR deal in 1989, they only had 7 investment people on the firm. They were tiny firms. And each buyout firm just only did buyouts. Or your venture firm, you only did venture. I came up with the idea years ago of saying, let's do buyouts, but let's have a separate fund for venture, separate fund for growth capital, separate fund for distressed debt. And we have multiple funds. Therefore, we could make our business not a mom and pop, but a institutional business by having more funds and more money under management, more back office, more infrastructure. Secondly, I decided we would do it around the world. It used to be that you're in the U.S., you invested there. You're in Europe, you invested there. I decided to grow and build a global firm by raising a team and raising money for them and recruiting a team in Europe, then Asia, then Japan, Latin America, Middle East, Africa. So we institutionalized it and we globalized it. And I was willing to go on the road to raise the money for all these things. And, maybe that was good, maybe it wasn't, but that helped.
And I've worked for lots of big institutions, JP Morgan, Deutsche, Nomura, and so on. What I do find is the bigger the organization becomes, you get politics. It's hard to avoid that all. And lots of institutional stuff starts happening, negative, things start to happen. And you talked about the importance of culture, but more practically, how do you avoid all the, the politics and the backstabbing that occurs when you get these large organizations?
Well, private equity firms are not comparable to banks or investment banks, which have tens of thousands of people.
Yeah.
We're big, but we have 1,700 people. So it's different. Also, when the founders are still involved, I think the culture is still reasonably good. Now, obviously, when the founders step back, it's a big risk because you don't know whether the culture is going to be continued or not. But again, Deutsche Bank, I don't know, maybe they had 100,000, 200,000 employees.
Yeah.
It's different. And the founders weren't around, of course. So it's different if you have 1,000 people, 2,000 people, 3,000 people.
Yeah,
Easier.
yeah, absolutely. Yeah. And in terms of succession planning then, when you have founder companies and you presumably you've invested in, lots of founder companies. I mean, how do you manage the transition process from founder to the next generation?
It's never easy. We've had our challenges. I think all the private equity firms have had some challenges. It's not easy. And, when you build a firm, you're reluctant to give up, running it. And so the founders in private equity tend to stay a little bit longer than you would say in other businesses. A lot of the founders didn't give up their control until they were 70 years old or so, or even older. But, it's happening now eventually. But, the 70 today is the old 60 or the new 60, you could say. But I would say some of the transitions have worked very well. I think Blackstone's done a very good job in its transition. I think KKR has done a very good job in its transition. And, so jury is out on a number of others, but transition is always complicated. The Chinese have a curse, and the curse is, may you live in a time of transition. So transition is always challenging.
Yeah. And I just want to come back to advice. Some of our audience are students just about to leave university. What advice would you give them as they move from university or school to the job market?
Continue to read as much as you can. Don't think that when you have a commencement, the commencement is the word for commencement means beginning, not end. So don't think you've ended your education. Keep reading. Learn how to write. Many people coming out of college still can't write very well. You have to learn how to write very succinctly in the business world, in my view, and learn how to publicly speak. Practice public speaking because you're going to be trying to be in front of people all the time, trying to persuade them to do what you want to do. And I think practicing your public speaking skills, practicing your oral skills, practicing your writing skills, and keep reading as much as you can. You can't read too much. And learn how to get along with other people. Learn how to share the credit, take the blame. Learn how to really get along with other people. Because in the end, you can't do anything great by yourself.
And how about what advice would you give to people in their 40s? So these are people who, they're successful in their careers, they reach their 40s, they probably have a family. What advice would you give to 40-somethings?
Well, if they already have a family, they've got a career, and they're reasonably successful, I would say, just keep doing what you're doing if you're happy. But if you're not happy, don't be afraid of making a change. I didn't start Carlyle until I was 37 years old. And, some people start businesses when they're early 40s. So if you're not happy with your life as you see it now, try to make a change, because what's the point of living being unhappy through your 40s, 50s, 60s, and 70s? So it's not too late to make a change and figure out what it is that's going to make you happy. Happiness is the most elusive thing in life. It's very difficult to find it. But if you figure out what it will take to make you happy, try to pursue that, even if it might be somewhat disruptive. Obviously, I'm not telling people to go ahead and get divorced or quit their jobs with no plans at all. But I do think that you should try to figure out what makes you happy and try to pursue that.
And then for older people, so if somebody's in their 60s or 70s, what should they be doing?
In my view, what you should do in those years is try to find the things you didn't do when you were younger but wanted to do. It's not too late to learn a new a musical instrument, learn a new language, learn how to find a community organization to help. I think the happiest people I know are people that give back to society. When you're in your 60s or 70s, you have more time to give back to societies. And I like to remind people that philanthropy is derived, that word is derived from an ancient Greek word that means loving humanity. And you can love humanity without giving checks or writing money. You can love humanity with your time. The most valuable thing you have in life is your time. And so use your time to give to other people, and you can be just as happy doing that as if you write a check.
And you mentioned reading earlier. Are there some books that have really influenced you?
Well, I interview a lot of authors, so I read typically 100 books a year. And
Wow.
so I feel it's a courtesy to an author when you're interviewing the person to read the book. I interviewed somebody last night who was a very good friend of Ruth Bader Ginsburg, and she had a really good book. And I read that. I'm going to read, and I every other day or so, I'm interviewing an author somewhere. So trying to read the books is time consuming. But I do think reading is, you can't read too much and you can't learn too much. So keep reading.
And you said 100 books a year. How do you read so many books?
Well, I'm reading books on subjects I know something about. So
Okay.
if I was reading science books, I don't read fiction. If I was reading science books or things that are technical, I wouldn't be able to get through them. I'm reading business books, biographies, history, political books, and I know the subject matter pretty well, and I can read reasonably quickly through those books. So it's not that difficult. But if you have the pressure of knowing you have to interview the person, you have to finish the book. So that's a little bit of pressure that I put on myself. So that helps get through it.
And in terms of what you're doing now, sounds like you're doing a lot of interviewing. What do you like about the interviewing process? Why have you taken this on as such a big thing?
Well, interviewing is still a small percentage of what I do. It's more visible. Investing in an investment committee, you're not seeing me. But the reason I enjoy it is because it keeps your brain sharp. You have to prepare. You have to go into a battle of wits with somebody you're talking to. So maybe it staves off the inevitable dementia that I'm probably going to get at some point. So I like doing that because it's intellectually interesting. I like to learn, and I'm always learning when I'm getting ready to interview somebody. I also, just like to see what makes other people tick. And so this enables me to do it. I sometimes have a pretty good sense of humor, and I can use my humor in some of the interviews. People seem to like that. So on the whole, I kind of enjoy it. I don't play golf. This is my, people say, well, how do you have time for this? Well, I don't play golf and I don't drink alcohol. And that saves a lot of time.
You don't drink alcohol? Why not?
Well, when I was growing up, I observed that people got drunk when they drank too much alcohol and they lost control. And I always said I didn't want to be in that situation. I also think that alcohol is designed to mostly make you maybe a little bit reduced from reality in the end. And I didn't really ever want to be reduced from reality. Also, I don't have to learn what wine is a good one and what wine is not a good one. So I don't have to spend days learning what pick one wine from another. And I've never found any handicap from this. And so when I don't take any wine or drink any alcohol, people just give me water or something like that, and I'm okay.
That's great. And I recall you earlier mentioned you had children. What advice would you give to parents?
Well, that's the hardest thing in life. I would say the hardest thing in life is to raise children. And if you have a lot of wealth, it's even harder. So I would say I'm not sure that I should be giving advice on that because I'm not sure I'm perfect at that. But put as much energy into that as you do into your professional ambitions as you can. And in the end, if you put enough time into it in the beginning, you'll see some good results when they're older.
Yeah. And as you're getting older and you start to think about your mortality, I mean, how do you think your view of the world has changed?
Well, I'm rushing to get things done because I know at my current age, I'm not going to live as long as I've already lived. So when you recognize that the way the world is set up, you're going to not live forever. I now find that I'm trying to do more things. What I call is sprinting to the finish line, because I'm trying to get more things done than I normally should. Normally people say, well, relax a bit, but if I relax, I'm not going to live that much longer. So I want to get things done before my brain falls apart or my body falls apart.
Okay, no, that's great. I mean, I've interrogated you a lot already. I mean, do you think I've missed anything out that you wanted to mention?
No, I think you did a good job. I just hope you don't get a TV show and compete with me, because I don't need any more competition in the TV show interview business.
I can't compete with your good looks. I think you've got the edge there. And just as a plug, your book is called How to Invest. We'll include a link on Amazon. It's a book I'd recommend to everybody on the call. Is there another way people can follow you? Are you on Twitter or LinkedIn or?
I don't know how to do any. I don't know how to do any of that. I don't know. I don't know how to do that. I do have a. I don't really know. I think there is somebody that does a Twitter thing for me, and but I don't like to do Twitter so much because Kim Kardashian has 183 million followers, and I don't want people to say, and Rubenstein has 6 followers. So I try to not, have myself in comparison with other people that have all these Twitter followers. So I think no one place.
And how can people watch your interviews?
They're on Bloomberg TV, which is seen all over the world.
Yeah.
And then in the United States on PBS. But if you look at Bloomberg, they put them on many times a day. So that's where the best place to watch it, Bloomberg TV.
Yeah. Okay. Well, with that, thanks a lot, David. It's been a lot of fun speaking to you. And good luck with everything.
All right. Thanks a lot. I appreciate it. Bye.
Thanks for listening to the episode. Please subscribe to the podcast show on Apple, Spotify, or wherever you listen to podcasts. Leave a 5-star rating, a nice comment, and let other people know about the show. We'd be super grateful. Finally, sign up for our free newsletter at macrohive.com/free. That's macrohive.com/free. We'll be back soon, so tune in then.